This is Kenya Treasury, says deny media reports in the local press in Nairobi that the country is begging the G20 for a debt service relief. The Minister of Finance says no application for such has been tendered before the G20. Of course, the G20 critical meeting is taking place this weekend. The 20 most industrialized economies on planet Earth. Kenya says we're not applying, we're not holding any cabinet meeting yet to apply. That story was false. The figure was $690 billion US dollars. In the meantime, the central bank in Kenya has raised 24.2 billion in treasury bills, and the Kenyan shilling fell today sharply, 111 to the US dollar. On the news, on that news story that Kenya is asking for a debt relief from the G20. Standard Chartered, Kenya, we talked about that earlier with Joshua. He's still around, by the way. Profits down 30.6%, much deeper. The pretty bad news from the banks in Kenya so far. Nairobi Business Ventures has appointed a new board of directors after the buyout by Delta. This company is suspended on the Nairobi Securities Exchange, by the way. Trying to fix it, then you can get back on the trading board. Rwanda's garment export revenue went up 83% in the year 2020. You remember, 2 years ago, United States had a face-off with Rwanda and say is going to place higher tariffs on Rwanda's garment or textiles that goes into the United States. And Rwanda says, we don't care. So they start looking for other markets. And what has happened in just 2 years, the country, Rwanda, has gotten its garment export revenue up 83% despite the pandemic. Rwanda is doing very well in terms of garment exports to other parts of the world, and ignoring just what the United States is doing. Let's talk about Kenya's Treasury, or the Finance Ministry. Today issued a statement that denies media reports that the East African country has asked for debt repayment relief from the G20 under the ongoing relief program. This comes as Kenyan banks are reporting poor earnings for the period ended September 2020. To provide more insight into these developments is George Bodo, a director at Callstreet Research and Analytics. George is joining us now from Nairobi. George, it's good to see you. We just finished off with Joshua and a very interesting conversation. I'm sure you were listening to him, part of his conversation about how pretty negative the numbers are this season for Kenyan banks. But let's start from the G20 story. The authorities, the Minister of Finance, has denied this G20 debt relief structure. What's the truth of the matter? What do you know?
The truth of the matter is that Kenya is under pressure. You remember when you tweeted about this, and I replied that, it is a classical case of the proverbial fly trying to move up a dunghill and then capitulates to gravity. This is the same case here. I think it's just a matter of time. They're trying to save face because they know that if they actually go for a debt relief, the global market's pricing will definitely go up.
Well, was that what we saw early today with the Kenyan shilling down sharply, about 111?
Yes, I mean, that pressure would be there. And I think right now the market is hugely short on the Kenyan shilling. And I don't know how they're going to do it. But I know that the central bank is calling dealing rooms all the time. It's almost like a military-style management that is going on right now. And in some cases, by the way, even the central bank is bypassing the banks and trying to reach the customer directly. In some cases where the customers are looking for huge volume. So I know that there's a lot going on in the background to keep that thing under stable. But I don't know. I think it's a fight they lose because of all this negative news coming. Kenya's seeking, Treasury came and said it's not true, but I know that Kenya is already under pressure, and it's just a matter of time, by the way.
George, there is no smoke without fire, but everywhere there is fire, the likelihood of a smoke being present is there. So that story by Nation Media and others, and we carried it here as well yesterday in Nigeria, here on Arise News Channel about this. Look at Angola and a few others in Zambia. What has happened not too far from where you folks are in Nairobi when you talk about it. The whole concerns right now with the G20. Today, Angola got a $6.9 billion debt relief from China. So it's not out of the blues that there are concerns that the debt issue in Africa is reaching another threshold that could go way beyond what the G20 can handle.
I tell you what, I mean, if I look at Kenya's budget for 2021, 2021, debt service is just about something north of 40% of government's revenues. Now, at 40%, 10 years ago, Kenya was using just under 20% of its revenue to service debt. It's using double that in this current fiscal year. Definitely. And next year, by the way, there's some Chinese debt that are maturing. Some loans that are owed to China Exim Bank are maturing. They will definitely have to reschedule those debts, those redemptions, plus interest. So it's just a story that they're denying for now. But I look at the next fiscal year, it's going to be that's where the drum beats are going to start.
Let's look into the books of the banks. And you spent many years as a banking analyst for one of the largest banks, not just in Africa, but around the world. So you have the banks at the back of your hands. So when you look at Cooperative Bank, you look at Absa Bank, you look at Kenya Commercial Bank, and this afternoon, Standard Chartered is reporting 30.6% decline in profit. That is huge. What is the general trend that you're seeing, George?
So on a year-on-year basis, you could see that the trend is going downwards. And there are a couple of things to pick out from the results so far. Banks are still understating credit risk. I can see that in those numbers. Cooperative Bank just decided that in quarter 3, they were going to increase their credit impairment charges to the income statement. Something that I had questioned them, were they not doing it in quarter 2? They said in quarter 2, oh, everything is still fine. And I know they were lying. I could see that in quarter 3, they increased the impairment charges on the income statement. It just gave me an idea that these guys were just sitting on a time bomb. And the question is just how many skeletons are still left in the closet? The two biggest banks, KCB and Equity, on a quarter-on-quarter basis, reported very strong growth in Q3 EPS. But my question is, look, you in an environment where the economy is frozen, and by the way, these two banks, probably for me, they're the best bellwether of the economy, because if I look at their books, they're almost more than half of the loan books are in SME and retail, and that's where the heartbeat of the Kenyan economy you could see. And these are guys, Equity reported 55% quarter-on-quarter growth in EPS. KCB reported 153% quarter-on-quarter growth in EPS. And when I look at this number, they're not continuing to add more provisions. So in essence, they're still understating credit risks. And also, they're not stripping off the income from the loans that they've restructured. Remember that a bank like KCB has restructured more than $1 billion worth of loans, and they're projecting that at the end of this year, they will restructure a quarter of their loan book. That puts the NPL ratio, in my assessment, to almost 40%. 40%, that's very high, and I put at Equity at 50% NPL ratio. And by the way, it is starting to show on the balance sheet. I'm seeing the capital adequacy ratio becoming under pressure right now.
So there was a new report on Tuesday by the S&P Global ratings for 2021 Global Economic Banking System Outlook. Of course, globally speaking, the report stated the banking system will be under pressure, but listed 6 African countries in which banking system will be under serious pressure, and Kenya was one of them. Of course, Nigeria was the ringleader, by the way. So the report says the banking system will be under pressure at least for the next 3 years, up to 2023. Is that a correct view when you look at the banking system in Kenya right now, George?
Yes, they are very right, by the way. My view is that this year is gone for banks. 2021 is also gone because, by the way, Kenya is having an election in 2022. And the way we do it over here is that when the election is, we start that hotly contested campaign, that violence that precedes elections. We usually start a year earlier. So next year, for me, it's full of politicking, and we also have a referendum in the mix. It's a toxic, for me, it's a toxic concoction for next year. So next year is gone for banks. We usually we'll hold elections around past mid 2022. That means from January to August 2022. That's also a lot of politicking. It's all gone. So I see activities resuming in 2023. And by the way, it's the time the COVID-19 vaccine timetable also comes in here for this region. The two American companies have processed huge success with the trials. They expect that by the end of this year they will start shipping vaccines to the Americans. I'm trying to extend that timeline to this part of the world. My hunch takes it to 2022. That's when we'll start having that stability that the pandemic is under control. So the pandemic timetable is also in there, the part of the politics. So I agree with them. We have about 2 or 3 years that we're going to be wasting for banks, and that means the balance sheets. I don't know what they need to do, but the balance sheets will likely be very weak by the end of next year.
My final question, George, for just about a minute or two, relates to life and living in Kenya generally right now. How do you folks survive on a daily basis in terms of the normal businesses in which people can get jobs, can get a daily living, cost of living, and things like that? Part of which, of course, the banking sector is a part of. Again, you folks have a very robust, one of the robust cooperative banking system in the entire continent or sub-Saharan Africa.
Yeah, so it's pretty tough. By the way, the National Bureau of Statistics just say that in Q2, 1.7 million people were out of jobs, lost their jobs because of that. We have a workforce of a formal workforce of about 3 million. Now, when you have about 1.5, 1.7 out of job, that's very significant for the economy. So the economy is in dire straits, by the way. And the government is not helping. The government, early the mid of this year, unveiled a stimulus package, which was for me is a drop in the ocean, given the size of the economy. If I look at the amount that they released, the amount of support they give to the more vulnerable families, it's not significant. It's nothing to write home about. They introduced a raft of tax measures to cushion the workers. But that tax measures that they introduced only helps people who are on the payrolls. People out of payrolls, no. Even business out of business, the government is finding a way of bringing back to business. So that the government has not done. So essentially, the government has not underwritten the economy, which they need to be doing right now.
George, it's getting a little bit depressing. Would you just you just go to bed? Thank you so much and put a smile on it. Thank you so much and have a great evening and a weekend, by the way. George Bodo from Callstreet Research Analytics in Nairobi.